For decades, Japan fought one problem: prices that refused to rise. Now inflation is finally back, wages are rising and interest rates are rising. But instead of celebrating, thousands of Japanese businesses are shutting down. In just the first 6 months of 2026, more than 5,300 companies went bankrupt, the highest first half tally in 12 years. So what changed and why should India care? Let's explain. According to Tokyo Shoko Research, 5,346 companies with liabilities of at least 10 million yen or about $61,600 went bankrupt between January and June this year. That's 7.1% higher than a year ago and marks the fifth straight year of rising corporate bankruptcies. The worst hit have been small businesses. Nearly 90% of bankrupt firms employed fewer than 10 people. Around 80% had liabilities below 100 million yen and most had paid-in capital of less than 10 million yen. Even larger failures are returning. There were 114 bankruptcies involving debts of 1 billion yen or more, the first time in 6 years that major bankruptcies crossed the 100 mark in the first half. And in June alone, bankruptcies crossed 1,000 cases for the first time in more than 2 years. The services sector led the list with 1,819 bankruptcies, its highest first half total in 30 years. Construction wasn't far behind. 1,026 firms collapsed, the first time the sector crossed the 1,000 mark in 12 years. Smaller subcontractors, from carpenters and plumbers to painters, scaffolders and electrical contractors, were among the worst affected. Restaurants are struggling as well. 509 restaurant bankruptcies were recorded, the highest in 30 years, while failures among Japan's traditional pubs crossed 100 cases for the first time. Food retailers, hotels and personal services also saw more closures. It's not one problem, it's several problems, all hitting at once. A weak yen has made imported food, fuel and raw materials more expensive. Meanwhile, rising energy prices due to the West Asian crisis have pushed costs even higher. Manufacturers have also raised prices on thousands of food products in June and July, citing costlier ingredients, packaging, logistics and energy. But consumers aren't spending enough either. Real household spending fell for 6 straight months through May 2026. In fact, nearly 3/4 of all bankruptcies in 2025 and the first half of 2026 were linked to poor sales. Then comes Japan's long-term demographic problem. An aging population and shrinking workforce have created acute labor shortages, forcing companies to raise wages. Tokyo Shoko Research linked 439 bankruptcies to inflation-related pressures and 237 to labor shortages. And finally, borrowing has become more expensive. After years of near-zero interest rates, the Bank of Japan raised its policy rate to 0.75% last December, increasing debt servicing costs for already struggling firms. For years, Japan's challenge was deflation. Today, its challenge is surviving the return of inflation. And if bankruptcies keep climbing, the world's fourth largest economy could face a much harder landing than many expected. Follow Business Standard for more such stories.